Hi everyone, my name is Albina Brenich, and I chose to do my evaluation on Adidas. So, a little background on Adidas. It was founded by Adolf Dassler in 1949. Their core product at the time was athletic shoes, while clothes, they manufactured clothes and sunglasses on the side. The company went public in 1995 on the Frankfurt and Paris Stock Exchange. Today, Adidas is the largest sportswear manufacturer in Europe. It operates through 13 different segments, some of which are Western Europe, North America, China, Russia, Latin America, Japan, and the Middle East. It is the second largest sportswear company in the US and the world after Nike. Adidas headquarters are in Germany. This year they appointed a new CEO, Kasper Rosler, and they operate in the athletic apparel and accessory industry. What they do is Adidas offers footwear, apparel, and hardware such as bags and balls and under the Adidas and Reebok brand. The company also provides for brands which it designs, develops, and distributes primarily golf clubs, balls, and accessories, golf-inspired apparel, and footwear. The company designs, produces, and distributes ice hockey equipment such as sticks, skates, and protection gear and apparel primarily under the Reebok Hockey and CCM brands. As mentioned before, Adidas is in the athletic apparel and accessory industry. It has a market capital of $31.68 billion and 6% market share. Below are the charts indicating Adidas's performances compared to its competitors. In my research, I have found that even though Nike remains king, it has been losing market share to Adidas and Under Armour. Regarding competition, Adidas, Nike, and Under Armour are the three of the largest retailers in the competitive athletic apparel industry. Adidas and Under Armour are making significant gains in Nike, each launching new products and new categories. Adidas has done extremely well in 2016, increasing competition and taking some of Nike's market share. As of December 31st, 2015, the company operates 2,772 stores in, I believe that's worldwide. Adidas has opened a brand new store in New York City this year on 5th Avenue. So this year, Adidas has posted 15% growth in revenues from $13.6 million of last year to 14.604 billion euros this year, while Nike's revenues grew 4%, 6%, and 8% the last 3 quarters. On the competitive basis, Adidas was doing better than Nike, which puts pressures on Nike's stock. So this is the valuation model for Adidas. To arrive at the current stock price, I had to adjust the growth rate to 6.3% with a discount rate at 9%. The growth rate of 6.3% gives us a zero difference between the current stock price and the value per share. On the next model, I applied a 7% growth rate. The value per share will be 97.34, giving a 21.6 difference. The following model, I applied a maximum growth rate, which I chose to be 8%, and it gave me a difference of 101.6 difference. On the mark, I was looking at research, and it was saying that even though Adidas's growth rate in the market is saying that it's I believe, but it's actually grew more, and it's actually 7.38% growing right now. So for the forecast, in 2016, Adidas has appointed a new CEO, Kasper Roster. Formerly, Roster was a CEO of one of the biggest consumer product companies named Henkel. With the appointment of the new CEO, the company shares went up 5% that day. Investors have high hopes for the new CEO. They were hoping he would sell some of the less successful operations like TaylorMade golf business, which is owned by Adidas, and didn't take long. And right now there's articles saying that TaylorMade is being in part sold off. Roster has experience with the same kind of companies as Adidas, facing the same kind of challenges, facing big U.S. market giants such as like Nike. Under him, Henkel share prices had more than doubled, reaching a new high by the end of the last year. This is below is also growth rates for the past years and the future growth rate of Adidas. Currently, Adidas is recovering loss of market share in the US. They opened a new Design 11 in Portland, Oregon. They're hiring different spokespeople. They're doing different things with their shoes, different ads. They're doing lots of advertising. The second quarter earnings are reported indicating 26% growth. Sales have benefited from continuing strong consumer interest in Adidas Boost technology, as well as impressive strong sales for the new $100 Alpha Bounce shoes. Adidas expects to grow in top-line revenue by 50% annually through 2020. Adidas expects its full-year currency-adjusted sales to grow 10 to 12%, thanks in part to busy sporting calendars including Rio Olympics and European Soccer Championship. It's becoming popular once again with NFL ad and major endorsement moves. It will also sign a long-term contract with Kanye West, which hopes gives it more popularity and as well as market share. For the macro, the election of Donald Trump imposes a real threat to Adidas. Adidas faces a risk of importing barriers such as high tariffs, tax reforms, interest rates, and are unclear. 96 to 99% of their shoes and apparel is manufactured overseas, so tariffs is a real threat for Adidas. In conclusion, Adidas is recovering and showing exceptional growth in 2016. It's forecasting sales to increase double digits next year. It's gaining market share. As of right now, Adidas is on the top of Nike, and Nike is struggling. Because of impressive earnings, Adidas is the strong buy right now. Investors are buying Adidas, and right now the company has projected above industry sales growth of 7.54%. Adidas has beat what analysts has expected in earnings by 11% in the past 3 quarters. So yes, I believe that Adidas is a great company to invest in. Thanks, guys.